Zimbabwe launched a new gold-backed currency called the ZiG in April to combat inflation and establish a stable local currency. However, this move has sparked a crackdown on informal currency trading, forcing street traders online and driving businesses towards formal banks. Now, this raises questions about the crackdown's effectiveness, the ZiG's gold backing, and the long-term outlook for a stable Zimbabwean currency. This morning, Dr. Prosper Chitambara, development economist, joins me to unpack this. Thank you so much, Dr. Chitambara, for joining us.
Thank you so much for having me.
So the ZiG seems to be causing more problems than solving them, according to some speculators. What impact has the ZiG had on inflation and the cost of living in Zimbabwe since it was brought on for? Has it failed as a project, or you would say it is living up to its billing?
Well, actually, it has been surprisingly a success. When you look at, say, the inflation numbers, there has been a significant decline in the inflation rate, both in monthly terms and also on an annual basis. So we have seen also a bit of stability on the markets. Of course, government is, like you rightly pointed out, is clamped down on informal foreign exchange trading. So I'm sure that is also obviously contributed to the modicum of stability that we've experienced on the foreign exchange markets in the past few weeks. But surprisingly, actually, the inflation rate for May, it has actually come down quite significantly, because the central bank has maintained its very, very tight monetary policy. So I think that has also contributed to that stability. But of course, it's still early days to really judge whether ZiG has been a success. I think there's need for more time, there's need for patience, and obviously government also needs to walk the talk in terms of implementing all the necessary policies and strategies that are required for a full and complete restoration of confidence in the local currency, the ZiG itself, and also in the economy.
So in terms of this clampdown, Dr. Chitambara, we see that Zimbabwe imposed fines for not doing transactions at the official exchange rate of the ZiG. So for you, to what extent do you believe that the crackdown on unofficial currency trading will boost activity in the formal banking sector?
Well, I think I think the challenge has been the mismatch between the supply of USD and the demand. So because of that mismatch, people have had to resort to the unofficial channels. Of course, the punitive measures are very, very strong. You can actually be punished around 200,000 ZiG. Which is a lot of money. In USD, that's probably around up to $20,000 for engaging in parallel market foreign exchange trading. But of course, the fact that that mismatch between the demand and the supply of USD remains, I think that will also probably put some pressure on the exchange rate, probably going forward. It's more so given the fact that this year is a very challenging year economically. We are in a drought, so agriculture production has gone down. So that's going to affect our agricultural exports. And also the softening of commodity prices will also obviously affect our exports. So this year, in terms of supply of foreign exchange, definitely there's going to be a significant drop on account of the drought and also the softening of commodity prices globally.
Okay. Well, Doctor, this is the Southern African nation's sixth attempt in 15 years to stand up a stable local currency. They've been trying for quite a while. Now, with this new clampdown, are there any risks associated with it? And is this not a temporary measure that will only fizzle out and return the situation to status quo and a weak local currency?
Yeah, I think what a lot of these guys will simply do is just to go underground. As you know, Zimbabwe is one of the most highly informal economies in the world. And a lot of people are actually taking out a living through a parallel market foreign exchange trade. So it will be difficult, obviously, to eliminate parallel market forex trading. I think a lot of these guys are simply just going underground so as to evade being caught by the clampdown by the authorities.
Okay, so let me just quickly go back to the issue around production levels in the country that's actually affecting the availability of forex. Are there any pointers or any sectors, anything that Zimbabweans can hold on to in terms of sectoral performance and contribution towards the country's economy? Because if we don't have enough to exports, then we would continue to have issues around forex liquidity. So are there any pointers and anything that helps us understand better what areas we may need to plug into that might ramp up production and help improve the forex levels?
Well, I think it's this year, most of the sectors, obviously, because agriculture has been affected by drought, so that obviously has a domino effect on most of the key sectors, including manufacturing, of course, mining. So agriculture is one of is the mainstay, rather, of the Zimbabwean economy. So that obviously then affects the rest of the economy. Even in terms of our projections, growth projections, we are projecting a growth rate of around 2% this year. And when we look at, say, manufacturing sector, we already, the results from the Confederation of Zimbabwe Industries Manufacturing Sector Survey is actually shown that even between 2022 last year, actually, there was a decline in capacity, a slight decline in capacity utilization. And we're expecting that declining trend to extend into this year as well, largely because of the drought. So I would say this year is a very, very challenging year for the economy in general. And of course, on a positive note, we have seen an increase in remittances, both from Zimbabweans in the diaspora and also even from donors, cooperating partners. So we are hoping that that increasing trend will also continue this way this year, and that should actually also mitigate the adverse impact of the anticipated decline in production and ultimately in export receipts.
Okay. Now, the street market has moved online with various dealers across the country being forced to abandon the regular city center spots using mobile phone messengers now to avoid detection. So is that going to be another major obstacle for authorities looking at this clampdown, or how can they further, on the flip side, how do you think they can further encourage people to now start using the official channels for ZiG transactions?
I think the idea, obviously, is to continue with the disinflationary reforms, especially as they relate to the tightening of the monetary policy as well as the fiscal policy. But I believe that once we are able to sustain low and stable inflation rate for at least 6 to 12 months, I think that should obviously cause a restoration in confidence by a lot of the economic agents. Was one of the major reasons why people were actually people are shying away from trading in the ZiG or even storing their value in the ZiG is because of the high inflation, which obviously erodes their incomes. So once we're able to stabilize the inflationary picture or outlook, then definitely that will have a significant impact in terms of the restoration of confidence by economic agents in the ZiG itself.
Okay, Dr. Prosper Chitambara, I'd like you to just stay with us for a while. We'll quickly go on a short break. When we return, we'll look at the fluctuation in the ZiG and how well policies can come on board to help stabilize this particular local currency. We'll be back in a bit. You're watching Business Edge on News Central Television. The Zimbabwean government has been clamping down on FX street dealers and has been encouraging people to go through the official channels to actually source for forex. Now, this is to help deal with the issue of inflation in the country and stabilize the local currency, the ZiG. We've been talking to Dr. Prosper Chitambara, a development economist, and he's been helping us understand this. Even as we draw a conclusion on our talks this morning, Dr. Chitambara. Now, the local currency was trading at 13.31 per dollar on Tuesday, up by 1.9% from its launch price of 13.56. Now, the ZiG is backed by 2.5 tons of gold and $100 million in foreign currency held at the central bank. So, in critical terms, how can authorities balance currency stabilization efforts with measures? What kind of measures are we even talking about when we are hoping to deal with inflation and mitigate the cost of living crisis in the country? Professor, can you please unmute your device? We can't hear you.
Can you hear me now?
Okay, yes, go ahead.
Yeah, so ultimately it's about controlling any unsustainable growth in money supply, which has been a major problem in the recent years, and also ensuring that we live within our means in terms of controlling our public spending. Because this year, because of the drought again, there's going to be a lot of pressure on public spending. And of course, government is continuing with its major investment drive, especially around key infrastructure. But obviously, it will be important that there is some balance in terms of stability and also the need to invest in these critical sectors of the economy. And of course, we also need to ramp up our gold production because we are obviously one of the biggest producers of gold on the African continent. And we need obviously to increase our gold reserves also as a way of ensuring a sustainability in terms of the stability of ZiG itself. Because ultimately, currency stability and sustainability is a function, of course, of production, but also production should also then help you, especially production of critical minerals should also help you to build your reserves as a way of even staving off any speculative attacks to the currency. And of course, the issues of trust and confidence, which again is related to macroeconomic issues of inflation, and the lower the inflation, the more the confidence and trust in the local currency and obviously in local institutions and the local economy.
You've talked about increasing capacity in terms of gold production, but that's regardless of different efforts by government in that light and the history of hyperinflation in the country. So I'd like to find out, how confident are you that the ZiG's gold and of course the foreign currency backing will prevent now the excessive printing and maintenance of its value? Because we need to also put that in perspective.
I think so far we can only rely on what the authorities have told us, their commitment that they will be committed to a fiscal and monetary discipline. So there's been a very strong commitment, especially from the new central bank governor and the permanent secretary within the Ministry of Finances also affirmed the commitment by the Treasury to fiscal prudency. So we are just cautiously optimistic that this time around we'll do things differently and we should be able to sustain the macroeconomic reform agenda.
All right, finally, Dr. Prosper, now what indicators should we monitor to gauge the success or failure of the ZiG now in the coming months?
I missed that point, sorry.
So I'm actually asking, what should be the parameter to gauge either the success or the failure of the ZiG in the coming months?
I think the parameters are very clear. Number one, you have to look at the exchange rate itself. Number two, you need to look also at the inflation rate. I think those are the two key metrics that we need to keep a watch on.
All right, Dr. Prosper Chitambara, development economist, thank you so much for sharing your thoughts with us on the show.
Thank you so much for having me.
And we wish Zimbabweans and the government all the best. Now, this is where we draw the curtains on today's edition of Business Edge. Don't forget that you can visit our social media handle at News Central TV. You can also head on to our website, www.newscentral.africa, and download our mobile app on App Store and Play Store. You can also check us on YouTube for more details as regards Business Edge and all other shows. I am Lee Banjo. Thank you so much for joining us. Enjoy your day.